Welcome to Alpha Wolf Trading. Do you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Please understand that this is not meant to be taken as investment advice. These videos are for information and entertainment purposes only. I am not a financial advisor, and I strongly recommend that before investing in any equity, make sure that you speak to a financial advisor or do your own due diligence. With that, welcome to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview with one of my favorites, and BABYF, Else Nutrition. Why is it one of my favorites? Because the tenacity of this entire team, right? The product that they make, which I think is absolutely a need. It's not just a want, right? It is doing good things for kids that have a problem with dairy products, right? Across the globe, not just here in the US, but everywhere, right? And until now, there wasn't anything. Now there is other stuff that's coming on board, of course, once something gets created. But you are the first, isn't that right, Hamutal?
Yeah, we are the first to be dairy and soy free, which is the only options for infants. And we're trying to get our ways through the FDA and be the first one to have an FDA approval for something that is different, something else.
And how far along are you on with that process?
So that really depends when we start the clinical study, and we want to get aligned with the FDA. It takes some time. We are in long-term discussions with them about getting aligned about the protocol, about the formula. I can say that they are quite hesitant to go according to their own regulation, because they could be a little bit concerned about what happened in the past 2 years or year and a half in North America, in the US, with regards to the shortage and the recalls that they've had been experiencing from other companies, our competitors. So they take it very slowly. They also, I think they're bombarded by by so many new companies, new brands that want to get into the US and have to do clinical studies, but they're dairy based. They're not, there's no, radical innovation in what they do. And so they have a lot on their table to complete and to, so they're quite preoccupied with a lot of things. And we follow their guidelines. We met all their requirements, and we are in discussions to have them, let's say, give us a green light to start the clinical study. Although we can do it, but we want to have their no objections on that. So we make sure that we spend the money correctly, and when we end the study in a year's time, we don't have any issues with them. They say, okay, you met that, you can get the permit. That's where we are with them. It takes some time, but we have tenacity, as you said, and we'll get there. From the moment we start the clinical study, it takes 1 year to complete, and then it's the submission, and it's in their it's in their hands from that moment onwards. So it's I assume it's a matter of maybe 2 years, a year and a half. We don't know exactly, but it takes a lot of time to convince them to let us start because of what happened in the market, I guess.
Right.
Because of the huge thing that never ever happened in this market for 100 years, something like that there was a huge shortage, and people got so furious about that, and so that's where we stand with them, but we are ready to start.
Got it. All right, so let's get one thing off the table right now, and that is the fact that you did a capital raise. And that's what, look, companies go public for usually, especially small companies that are growing, they go public so that they can fund their growth, right? So that they can raise capital. So until you get to that place where you're self-sufficient and, you don't have to raise capital anymore, that's just the nature of the beast, okay? So that is where you're at. But I guess the thing that I always try to look at is, what have you done that is putting you further along on the path of getting to that point where you're not going to have to raise capital, right? And one of those things was your newest manufacturer agreement, your facility, right? You take a lot of costs that you were paying out, correct?
Yeah, I would like also Sokhie to speak to that, but I'll start with reiterating the fact that our first manufacturing site started with us with an X amount of dollars per pound of powder. And during the course of the 2 years that we were with him, 2.5 years, they raised the price, they tripled the price because they could do so. There's not too many manufacturing sites for infants in the US. It's part of the problem, right? And that's why they allow themselves to do that. So we had that point where they made us go out of stock, and they made us, look for someone else because of those two reasons: out of stock and the pricing. So we found that match, and we found a new manufacturing site, which we announced a long time ago. Took some time to qualify them to our needs and to our parameters and everything. So this is one thing that we've done. We've reduced the cost of manufacture in 60% or more. Now we got back to the old price, more or less. So that's one thing that we did to gain back our gross profitability, which got lost in everything that we did. Second thing, we cut a lot of costs, which were, not necessary at the time that you need to get more lean and agile. So we cut a lot of costs. We became way more efficient in marketing. So we did things that, at the beginning, you have to create awareness, you have to build awareness, and it costs a lot of money from doing that from scratch. In the US, it's a huge country, costs a lot of money. But when you get more, presence, and now we are a nationwide brand, we have a footprint in 50 states. We have 13,000 stores in North America. Everybody sees us all over the place. So it takes less of an awareness, and you get more to get efficient in terms of the return on your spend. in marketing and in sales. So that's what we did as well. And we brought products into the system that are way more fast moving, more of an impulse purchase, like the ready to drink, which is a huge category compared even to the infant category, which we are not yet playing in. We are on the toddler, but it's a huge category. It's 4 times the infant. The infant is 5.5 billion in the US. The kids ready to drink category is estimated at about 22 billion. It's a fast mover. The age range, the age group is much larger. It's like 2 years to 13 years. And people use it on a daily basis. They don't think too much because it doesn't involve a pediatrician necessarily. It's more of an impulse. We have a great, delicious product that everyone tells us that we are the best in category in terms of the plant-based category for kids. That's why we're listed all over the place. And that's why the more we gain revenues from that fast mover, we get closer to the moment we are cash flow positive, including all the rest of the things that we've done. So that's where we're aiming it.
Right. You're not just sitting here resting on your laurels and right. And look, you're building a whole new category. So you were first to market, really. You're building a whole new category. And what you've accomplished in a very short period of time, how many stores and locations are you going to be in? You just set through the number out, but how many are you already in? And then with the ready to drink, how many stores do you have now, and how many are anticipated to come in line in the next 6 months?
So with the ready to drink, we're just started. The ready to drink, we are in Wegmans, it's 120 stores. And in Metro, I think it's about maybe 200 or so, maybe 300, I don't remember, Metro Ontario in Canada. These are the 2 brick and mortars that are already, we are all on the shelves. We hit the shelves just a few weeks ago. But we anticipate to have at least more 3,000 big grocery stores in the US in the next months. That includes big retailers. And we're also online. We are in several platforms. We're on Walmart.com. We're in Costco.ca, which is a huge retailer. So if that happens we would go on the warehouse, on the stores, that is a completely different story in terms of revenues. And that's, the gateway to get there. And that's the anticipation to be on the stores in Canada as well as in the US at a later stage. If we show success on the online platform, then this is, the velocity in the store is so different because they take a pallet per store per month. Another store, even a big store, a grocery store, would take a few cases per store per month. It's a completely different story in terms of revenues. And we're also talking to other clubs like Costco. There are some others. We are in discussions with them because this is a real fast mover, and they can move. It can move a lot of revenues in a very short time, and that's a game changer for Else, and that's why we think 2024 is going to be a very good year for us.
So you also have the I guess you could call it the beginning of a partnership with Dan One, right?
With Danone. Danone, yeah.
I call him Dan One.
Okay.
Yeah, you can say it however you say tomato, I say tomato. Okay.
Yeah. I'll let them know. Maybe they change that. Okay, so yeah, discussions are continuing. We have no guarantee that definitive agreement will be signed eventually, but we are in discussions with them to conclude. It's a commercial discussion, and after we've completed all the rest of the points, which were not necessarily commercial, but more the R&D, the formula, the IP, all the rest of the things, the marketing side, the appetite from the market, and all these kind of things. So we continue the discussions, and we hope to have it concluded as soon as possible.
Right. So I mean, you do have some interesting irons in the fire that could really change things, change the picture pretty dramatically overnight, right? It's not like you're sitting here just hoping and praying that things are going to start. You're going to continue to get new stores. I mean, you're out there actively going after it, right?
Yeah, I have no guarantee about Danone. I mean, Danone is something that's really on the fire, but
Right.
I don't want to mislead anyone to say that it's 100% guarantee that we sign the definitive agreement. There's still negotiations in place, and just
Got
make sure that everybody's so
it. Got it. That's very clear. But the point is those things are happening, right? I mean, it's not like you're sitting on your hands. You've got avenues that you're exploring, right? And
yeah.
they work or not. I mean, you can't guarantee that, but the fact is you're there and they don't have a solution for what you provide. And if the things make sense, and like you said, the formulations and the want and need for it, then they'll work out, right? So I mean, you've got a lot of irons in the fire is all I'm trying to say. It's this there's a lot of different potential catalysts that could
There's another catalyst that we're looking at, which is the adult ready to drink, which is expected and already developed as a product, expected to be launched in the second half of this year. This is a completely different category, different buyers, sometimes even different retailers, because we can also I mean, it could be attractive to C stores. So that's a huge amount of stores, although small stores, but C stores can also carry that. So, I mean, convenience stores.
assisted living and hospice facilities too, right? Would be
Right,
a
right,
big target.
right. Although we don't have the marketing system to support, or the sales system to support it yet, it's something we need to build, but we will start obviously online, and then we'll go to retailers and they'll list us because they kind of know us already. So it's easier. And I think since the category is so dull in competitors, there's only the main major competitors are Ensure and Boost.
Yeah,
That's what you see on those shelves. It's a complete nutritional drink to support your health when you're a little bit elderly. Um, and I think this is a great opportunity for people that really are suffering from all those issues, just like the babies, with the dairy and the digestive system. That's a great solution for them.
right.
So that's another catalyst. And of course, they're still very young, these two other catalysts, which are UK and Australia, but they're growing. We see some sprouts of growth in there. We were just accepted by the online platform of the largest retailer in Australia. And so that's one thing that I wanted to point out. And also in the UK, it's just starting. It's very small yet, but and we don't invest too much in marketing there because we want to spend in the major market now. We have to be agile. We have to be very careful with the spend. But we now see another distributor that would take us into another 4,000 potential stores. So we're growing, but this is something that we would grow. That business we would grow along 2024, and that would definitely grow into maybe more countries in 2020, the second half of 24. And that is something that we grow slowly but surely. So that's another thing that I wanted to point out.
Which slowly is not always bad, right? Slowly
No.
is not always bad, because the faster you grow, the more cash you need, right? So more inventory you got to put out. So slow growth is not always a bad thing. So I think the biggest point is, in a very short period of time, I think you've grown your product has gotten into stores in a very short period of time compared to a lot of products that have, you know what I'm saying? It just seems like you've got velocity in getting into places a lot faster than a lot of these other A lot
Right.
of companies that are still trying to get in, right? I mean, they've had products out forever and they still can't get into like the big boxes, right? So I think that speaks for itself, right? There is a very differentiated product, and people seem to love it, right? So it's got a good taste, and it agrees with their body, right? So I think that's a positive thing. Sokhie, you're awful quiet today, man.
I'm just waiting, let you guys go at it. Yeah, I mean, a couple of points to highlight. One is that in terms of your previous, what Hamutal was saying in terms of cost efficiency. So, 2 years ago, it was all about top line growth. Everybody was telling
Right.
us, go and market, get revenues, get revenues, get revenues. So, and that's what the market wanted. And so, that was the focus. Let's go out there and expand. Let's, spend the money and get those revenues. And that's how it started. And then all of a sudden you had this sort of dynamic shift in the markets. As the market started to decline, it became all about fundamentals, all about bottom line, all about profitability. So,
Mhm.
but for a small company, a startup, it takes time to adjust to that. I mean, you can't do it overnight. So internally, we had to do a whole shift saying, okay, the market is no longer accepting just top line growth and spending money. They want efficiencies, they want bottom line. So that's when the shift started, and it has taken time, and I think we're there now over the last 2 years to get there. Our biggest hurdle was, how do we make production more efficient? How do we reduce costs? And that took time. That took all of last year, and it's been done. Now we're producing at, we've cut costs over 40% on the production side, and that's huge. So these are all things. And then the other was, in terms of being a small company, you mentioned funding. Funding dried up over the last 18, 24 months. So you have to be creative, and you have to look at all opportunities. And being a small company, we explored all different avenues, including debt and convertibles and all that, because you have to. You have to go out and explore all opportunities when the markets are down. So, we made decisions that we had to weigh against, how it might affect the stock or it might affect the company. But at the same time, we had to make sure the company was going to survive. So, you have to do what you have to do during those times for you to come out the other side. And that's what we did. Hindsight's 2020. We can look back and say, hey, maybe that wasn't, maybe, in terms of the market, the best way to do it. But at the time, that was, that was what was available, and you had to make a choice.
Right.
So moving forward, yeah, we're still at early stages. We are expanding, we're growing. It still requires capital. So we still continue to explore all opportunities until we get to the point where we are, break even profitable. At that point, we won't need to look to the market. We'll be able to self-sustain.
Right.
But that shift, is happening. But at the same time, we're launching new products, and again, it takes capital. So to answer your earlier question, yeah, we're always on the lookout for capital. Ideally, we would love to get more strategic type of capital coming in, working with investors or groups that are going to work with us and help us grow. We would love to get long funds that see where we're going to be 24 months down, 12, 24, 36 months down the road, and are investing for that reason. But, looking back, majority of our money has come through hedge funds. I mean, and that's a reality for any small company.
Right.
And, they are who they are, but it's
They're not long-term investors. They're short-term hedged guys.
yeah, they're going to hedge on the warrant, and that's what they do. But, being a startup in a new company, you don't have much alternative. So you have to take the capital, right? And what's going to make it change is you deploy that capital in an efficient manner and show success. If you do that and you add fundamentals and you grow, then you will start attracting the next generation of investors. And I think we're getting close to that point, or are at that point, where we are now looking at and talking with those that see us where we are looking at us on a fundamental basis, saying, okay, where are you going to be 12 months, 24, 36 months from now? And does it make sense for us to deploy our capital with you to help you grow?
Right.
Yeah, so it's that sort of that inflection point.
So, it's funny because we go through these cycles in the market all the time, right? Where, and this is like a cleansing, and it puts everybody in check. And it's like, okay, it's not just about growth at all costs, right? It's about now it's about the fundamentals. It's about but you know what's going to happen? You'll have this all nice and tidy, and and you'll be financially stable, and then the market will be looking for growth.
Well, exactly. It's a cycle,
We'll
right?
go through that cycle. That's what's going to
Exactly.
happen,
Yeah.
right? If anybody thinks that's not coming, it will come, right? Everybody's
Right.
being conservative. They're getting out their house in order. They're cutting back. And guess what? When this is over, it's
You're
gonna,
so right.
and they're gonna
You're
say,
so right.
"Where's the growth?"
Exactly.
Exactly.
That's coming.
Exactly. Yeah.
Exactly.
But it's good that these cycles happen, because you know what? You do need to stay disciplined. You do get more efficient when you have to make some choices, right? You get smarter, I think, when you go through these kind of cycles. A challenge makes you, when you can overcome the challenge, makes you smarter, right? So hopefully you do it right, you do it better the next time, or you don't put yourself in the position that, you keep in the back. Hey, remember what happened last time? Let's make sure let's grow, but let's stay reasonable, right? I mean, there's some things you just got to say no to, right? Those are the lessons you learn. Those are the things you learn throughout business, right? And you're not going to make every
Yeah.
right decision.
Oh, no, I mean,
And you can, yeah, sorry, go ahead.
sorry, I was gonna say, yeah, the last 2 years, I mean, there was a lot of difficult decisions that had to be made internally. Funding was one of them, and there was others as well. But as you say, those decisions have to be made, and sometimes they're not going to be favorable decisions with investors or people that are sort of on the outside. But and it's hard to explain to them that, look, decisions are made not lightly. I mean, there's a lot of thought that goes through it. We evaluate all the things, but and we know that some of the decisions aren't going to be in favor. I can go back and tell you some of the bigger decisions. Shifting our inventories from online to retail was a huge one, and it wasn't favored. Everybody was saying, "Oh, why would you do that?" Well, what they don't understand is that, look, we're making these decisions based on certain things, and in that one in particular, it's a lot easier to try to recover from online sales than it is from a brick and mortar. Once you lose a brick and mortar, especially a large retailer, you're not getting them back, right?
Right.
So it's hard to explain these things. And same thing on funding. Investors came back and said, well, why did you take that money? Well, because that was the only money that was available at that time.
Right.
That's it.
It's the least,
Right.
you do the least of the worst. How do you say that now? What's the word for that? The least of the worst?
Well,
Yeah.
yeah.
Otherwise, the company can die. I mean, if you don't take the
Yeah.
money, company dies. So you lose all your money. And that's, so the choices in those hard times are very hard. But it's always, between worse than least worse. Nothing good in there. There's
Right.
nothing positive in it.
And-
And you can also, the multiples of this, when you're acting in, I mean, every small company acts in a very uncertain environment. But when you are a radical innovator, when you have no support from the standard manufacturers, standard raw ingredients, standard anything, nothing is standard, because we are trailblazers, then it gets way more difficult to do everything, especially when the market is crappy, especially when everything goes against you. Then what do you do?
Right. I'll tell you what you do. You keep grinding. That's what you do.
Exactly. No, bingo. I mean, that's it. And you look at you look at the fundamentals of the company. Yeah, we're still early stages, but in terms of growth, I mean, to launch a new product from scratch and develop it, launch it in a short period of time, and get it into North America as widely as Else has done over the last 3-4 years is, it's phenomenal. As you mentioned yourself, Tim, earlier, that new products coming out can take up to 10 years before you get really decent penetration in the market. Else has done it in basically 3 years.
Right.
So
Right.
Right.
Which speaks volumes, right?
Which speaks volumes, exactly.
And I look, that growth also consumes cash. I mean, it's like, it's a double-edged sword. right?
Of course.
Yeah.
It's a double-edged sword. So you almost don't want to be that popular. You don't want more stores calling you because that just means you're going to have to come up with more money, right? That's a tough thing. That is a very tough thing until you get over that hump. I get it.
Yeah.
And anybody that's ran a business gets it. Investors sometimes don't get it, right? They want instantaneous results. And I understand that.
Yeah.
It's not realistic, right? It's not realistic. If you're going to invest in a company, and I'm not talking about, trade, I'm talking about if you're going to invest with a company, it's going to be a while. It's going to be, if it's a startup, it's going to take a while. Not everything is going to be a rocket ship straight up with, unlimited funds. It just doesn't work that way. So, you got to go through the grind and you got to learn the lessons and you got to build the team. And then the team keeps getting better and better. And, look, eventually you get there, right? You have a great product. That's a good thing, right? You have a tenacious leadership team, right? That doesn't give up. It's hard to beat somebody that doesn't know how to quit.
Oh yeah. No, you're right. I mean, and revenues is another one. You're right. Everybody wants consistent, huge growth revenues. Well, retail doesn't work that way. It's going to be cyclical. You're going to have, for the most part, I think if you look at our growth quarter over quarter, we've had for a startup pretty decent quarter over quarter growth. We had one quarter where it was down, but retail is lumpy initially until you get large enough where you can smooth out your revenue on a quarterly basis. So trying to get that across to investors has been extremely difficult. They just don't understand. They want to just continue sort of that big hockey stick type of growth. And that will come, but it comes at an inflection point where you get large enough where you're not having to worry about orders on a month-to-month basis because they're consistent. They become more consistent over time. And we're getting there. But we're still relatively early stages. But this year, with the new product lines, the new markets, that's going to start becoming more consistent.
Yeah.
But you're still going to see a little bit of lumpiness. But that'll level out over the next I would say next 12 months.
Right.
I agree.
Listen, I wanted to get you on just so that we could just talk about what's happening. You've got the ready to drink drinks that are already out for the kids. You've got an affiliate program too, don't you?
Yeah, we do.
Okay.
It's a new one. It's like a 6 months program, and it's growing all the time. We're growing it and we're nurturing it all the time, and we see good results, but it's still not very massive. We're growing it.
And that's another, that's another avenue that I'd like to see that you're exploring, that you're getting into, right? I mean, there are you're thinking out of the box and you are you're doing everything that you can to continue the growth to the company, right?
Correct.
And you're going to come out with the drinks for the adults. That'll be a whole nother market. And I think a good one. I think a really good one, because there are a lot of elderly people, my generation. I mean, there's a lot of us, right? And I think I told you before, I volunteer at a hospice center, and I see the insurer that comes in, right? I mean, they're doing. I guarantee you will have one hospitality for sure. I know you're going to get that one as a distributor, but I mean, if it's as good of a product as you're saying, and it's, for people that have issues with dairy, I think that's going to be a huge hit, right? So I think you're doing all you can do. This is a very tough environment, and but do I think it's going to stay that way? I don't. I don't think it's going to stay as tough as it has been. I think it will turn, and when it turns, you think about Red Bull, right? Red Bull at one point was like nothing. I mean, there was like a nothing company, right? And look at where it's at today, right? All of a sudden, boom, they came out with this, and it just went crazy. Now you got energy drinks coming out of your ears. There's so many brands of energy drinks, I can't even handle it, right? It's just, you're in a brand new category. You're just getting started, but you're growing quickly, and it is a needed product. I think far more than Red Bull is, right? Red Bull is actually not very good for you.
No, not at all.
It's not. It's like not good for you, and they sell a lot of it. This is actually good for you, and you know, people are getting more health conscious all the time. At least it seems like. So I think you're in the right category. You just have to stay. You have to stay tenacious, and Hamutal, you have no problem there.
Yeah.
You're not lacking in that.
That's my forte. Yeah.
All right, listen. Anything else that you want to bring up before I wrap this up?
No, I think we've hit all the high points, and you know, the company had a business plan strategy, you know, right at the onset, and I think we're following that strategy, and you know, other things as we said will come along, such as Danone or such as other opportunities, and we'll explore those opportunities. But it doesn't change, you know, it doesn't change the execution plan on the business. That was always set from day one, and they're continuing to do that, which is to grow the company based on its IP and its product lines. And that's what we're going to continue to do. Else has been doing that for the past 4 years, right from the launch of the first product on to now additional products. So for us, those are, you know, to do these external things that come along are a bonus, but it doesn't change our trajectory in terms of the growth for the company. We're still going to continue to execute on our own strategy. It'd be wonderful to have, you know, one of these, you know, Danone is a good example, to have that come to fruition, and that's a bonus. But having said that, we can't bank on it. We can't bank on, you know, these other opportunities that come along. The
Right.
only thing we can bank on is the strategy that was put in place years ago. And again, you know, we're dynamic. You have to sometimes change, but for the most part, we're following that.
Right. And you know, here's the thing that you always have to remember is that as you continue that growth, right, what are you doing? You're showing that there is a demand for that product. There is a want and a need for that product, right? So you're growing. Eventually, one of the big boys that isn't capitally constrained says, you know, these guys are really putting something together, right? They'd much rather buy a company that has a proven product and then put some marketing muscle behind that product because they can, right? And they see you're proving the model. You're in that phase, right? You get into the kids drinks, if that takes off, then you get into the adult drink, that takes off. I mean, you've got what, 12 product categories right now, or 12 products right now? Or is it more than that? 20? How many products do you full line?
We have 3-4 product categories, but we have 12 SKUs for US, another, I don't know, 5-6 for Canada, another few for UK, another few for Australia. So all in all, we have something like 30 or 35 different SKUs.
Right.
Well,
and you're growing.
And
So
we're growing, and the most important part is that we're now getting into a category that grows much faster than the toddler. The velocity on shelf is much faster. The impulse is a big component of that category, because you don't think twice when you're looking at a kid's drink, then you look twice or many times when you figure out which baby formula you use for your baby, right? It takes a lot more involvement and research and this and that. With regards to a baby, with the kid's shake, so you see something nice, you try it, and we're gonna generate a lot of trial for that product, because once you taste it, you're hooked. So you get it, the kid like it. Well, great. It's the same cost, the same thing. It's a delicious product. Why not take it? It's more of an impulse. It's a fast mover. It's a different story. So we think that the growth is going to be way different. As Sokhie said, it could be a hockey stick now.
Yeah, the
With-
other thing is just the sheer size of the market. I mean, and most people probably
Right.
don't know the current market with our, with our powdered drinks, roughly just for North America, not looking at the whole world, just North America, which is Canada, US, is around 5 billion in terms of size annual, right? The market that we just entered, which is the RTD for the kids, is 4 to 5 times bigger. It's around 22 billion. Like it's a massive market, and then you get into the adult shakes, and that's a I mean, that market's massive in North America. I'm not talking global. I'm just talking about the North American market.
Yep. I mean, you've got some nice markets there that you're going at, and you've now have an established brand that is well liked, right? So that is, I think, a positive. It will keep continue.
Oh yeah, I know it is, and like I said, the overall market size once we've launched our the third line, which is the adult shakes, you look at the combined market size just in North America alone, you're going to be north of 35-40 billion annually. Like it's a massive, and for us to capture a small piece of that is not impossible. The other is you look at the soy category. Soy category has dropped over the last 2 decades from being roughly 25-30% of the market to less than 5%. So,
Wow.
right.
In the infant formula.
Infant. So really there's only one alternative. So, that's a massive opportunity to go in and try to replace or even replace a small piece of that market.
Right.
Yeah, but we are just now in toddler, and the toddler in America is very small. It's 15% of this 5.5 billion.
Yeah.
It's just 15%. Once we get the infant, it's a different story. But the kids category is much larger anyhow.
Yeah.
So
That's all right. Listen, let's when do you want to do a follow-up?
I think follow up towards the end of maybe end of Q2 going into Q3, because by then hopefully we'll have better ability to tell you on the next launch, which is the adult RTD, and also it'll give us time to have a little bit of traction on the RTD and see how that's growing. Okay,
very good. All right, listen, I want to thank you for coming in. Else Nutrition, ticker symbol BABYF. Check them out. Technically, I'm just going to throw this out here, right? I mean, no, it's not an attractive chart. It's going from the upper left to the lower right. Is the company going out of business? I don't think so. I think that I think this is a really dynamic team. I think they've got a great product, and look, can the stock go lower? Anything's possible. I'm not going to say it's not possible, but I will say this: it seems to be finding a base, and it seems to be just going sideways. Maybe the sellers are gone and buyers are waiting, right? But to me, it looks like you've got consolidation going, and there's nothing wrong with building a nice base to launch from, right? That's the way I like to put it. You build this nice big base. The bigger the base, the higher the launch. That's usually how it works. So, well, if you're not watching the story, I would suggest you put it on your radar. If you're not comfortable, I mean, you have to ask yourself, what's the risk reward here, right? And the risk is you're going to lose 13 cents or 15 cents. What's the potential reward? Can it go back to $1? Can it go back to $5? I mean, where could it go, right? So I think your risk reward is pretty favorable down here. Let me ask you this: are you a stronger company today than you were 12 months ago?
Oh, it's night and day. I mean, yeah, it's night and day. I mean, the fundamentals, if you look at the last 3 years in terms of where we were, the stock price and fundamentals have gone in opposite directions. Fundamentals have grown substantially over the last year, 2 years, 3 years, where the stock has declined. So yeah, I have no qualms, and Hamutal can can also, comment on that. The company, I would say, is much, much stronger in terms of fundamentals than it was 12 months ago.
Hamutal?
Yeah, I definitely agree with that. I definitely agree with that.
Right.
Yeah, we have established manufacturing for a long term. We have established ready to drink capabilities, which we didn't have, and we couldn't find at the first 2 years. We have established all the fundamentals for the clinical study. We're just, the political side with the FDA is going to be resolved, but we have done everything that we had to in terms of the regulation and what we need to meet. And so all those things were not there before that, and we definitely are in a completely different place where we were 12 months ago and beyond that. And I'm just very optimistic for the next year, or this year, actually. It's not the next year. And yes, I totally agree with what Sokhie just said.
Yeah. All right. So look, are you wiser today than you were 12 months ago?
I hope so.
Listen,
I don't know.
as you
We're
go
just getting
through
older, aren't we? Getting older.
yeah. So, look, as you go through the challenges and understanding the capital markets isn't always the easiest thing either, right? There's a learning curve there, right? Because
Right.
these institutions that act like your friends and your partners, you sometimes find out that they're not exactly your friends and your partners, right? So they can make things more difficult on you too. But I would say overall, in general, you have a good product. You're providing something that people need and they like it. So, and you're growing, I would say, pretty quickly. So you have a lot of wins that you can celebrate. You haven't gotten all the way to the finish line yet, but I think you're on the right path. So that's and just you can't stop, right? Hard to beat somebody that can't stop. So it doesn't matter.
So.
All right.
And we're undervalued. We are undervalued now.
Yeah, exactly. And that's probably why you're seeing this base that's being built, right? So
Right.
like I said, what's the risk reward? Maybe you dip your toe here. You don't have to go all in. Nobody has to go all in, but you dip your toe just to make sure that you're paying attention to the story. And then go to their, website and sign up for their email alerts. And then you get all the news that comes out sent directly to you, and just follow the story. Because I think this, in the long run, this is going to be maybe it'll be a 10-year overnight success, or maybe it'll be a 5-year overnight success. But I do think it will be an overnight success at some point, right? Nobody's an overnight success. It always takes 13, it's a 13-year process in the building, but then all of a sudden it happens, right?
Yeah. Like all the stories about the big ones that we already know today. They have
Right.
the same stories. Let's hope we get there.
That's the same story. You're absolutely right.
It's just about tenacity, isn't it? I mean, you just need to be tenacious to get there. If you give up, you just gave up, so you don't know. You just don't know what's going to happen.
Yeah, you don't know if you give up, right? And you can't give up. And there are going to be challenging times. And that, if you're an investor, that means you're going to go through rough times too. But if you believe in it, if you really believe in it, and ask yourself, why did I get involved in it to begin with? Because of the impact that it's going to have on all these lives that up until now didn't have this as an option. Maybe that's why you got involved. It's more than just the balance sheet, right? There should be things that you got involved in this because of something else that is meaningful to you. If it's not meaningful to you, then you're just going to bitch all the time about it. That's what you do, right? If it's meaningful to you, you join in and you support, and that's what you do. So, all right, that's enough of my preaching for today. We'll have you guys back after what you said, the second quarter.
I think it's maybe touch base towards the end of the second quarter.
Okay. Yeah. Sounds like a plan. Thank you for coming in.
Thank you, Tim.
We'll talk to you.
Thank you, Tim.
Talk to you.
Always a pleasure.
Okay. All right. Thank you for tuning in to today's follow-up interview with Hamutal and Sokhie from Else Nutrition, ticker symbol BABYF.
BABYF. I hope you enjoyed today's interview. And if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are very important to us here at Alpha Wolf Trading, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Trading wishes you the very, very best of success.